This is the Southside School of Financial Freedom Watch List and Market Report for the week ending October 22nd, 2022. Our question this week is, what are financial derivatives? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 2.47% on Friday and was up 4.89% for the week. The S&P 500 increased 2.37% on Friday and was up 4.74% for the week. The Nasdaq increased 2.31% on Friday and was up 5.22% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the major indexes. On Monday, Tuesday, and Friday, all the major indexes finished up. On Wednesday and Thursday, they all finished down. The new unemployment claims were 214,000. Existing home sales fell 1.5% in September to a 10-year low. Mortgage demand dropped to a 25-year low. The 10-year U.S. Treasury yield topped 4.2% on Thursday, and the president announced the release of up to 15 million barrels of oil from the Strategic Oil Reserve. New unemployment claims, a fall in existing home sales to a 10-year low, mortgage demand dropping to a 25-year low, the 10-year U.S. Treasury yield topping 4.2%, and the president releasing up to 15 million barrels of oil from the Strategic Oil Reserve are all news, and news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are financial derivatives? Financial derivatives are contracts that derive their value from an underlying asset or group of assets. The contracts are made between 2 parties who agree upon the purchase or sale of an asset at a given price by a given date. When the value of the underlying asset changes, the value of the derivative contract also changes. The derivative's value normally change by a greater percentage than the underlying asset's price change. There are several types of financial derivatives. For example, forward contracts, futures, swaps, and options. And among the options, there are call options and put options. Common underlying assets are stocks, indexes, bonds, ETFs, currencies, and commodities. The Southside strategy uses stock option contracts, which grant the buyer the right but not the obligation to purchase or sell the underlying stock at a certain price by a certain date. There are advantages and disadvantages of trading derivatives. Major advantages include the potential for high returns, leverage, and limited risk. Major disadvantages include less liquidity, high commissions, and time decay. And in the case of options, not all stocks have stock options. Do your stocks have stock options, or do you own any stocks at all? If not, Why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending October 22nd, 2022. The strongest performer on the list this week was Datadog, ticker symbol DDOG. It's in the second column. It was down minus 0.23% on Friday, but was up 8.53% for the week. Datadog Incorporated provides monitoring and analytics platform for developers, information technology operations teams, and business users in the cloud age. The company's SaaS platform integrates and automates infrastructure monitoring, application performance monitoring, log management, and security monitoring to provide real-time observability of its customers' technology stack. Looking at a summary of results, you can see that Datadog has decreased almost minus 54% year to date. I did not trade Datadog this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is down minus 1.2% versus minus 21.2% down for SPY. A difference of 20%. The Southside is beating SPY by 20%. The cash flow generated by the Southside cash flow system for this week was 5.73% of the portfolio account value. The account value changed by 6.25%. Meanwhile, the S&P 500 ETF SPY changed by 4.66%. Bitcoin watch. Bitcoin lost minus 0.21% this past week, and it continues to be in a bear market. It is down just over 72% from its all-time high achieved in November 2021. I sold option contracts on two positions this week, one call and one put, that ranged from $54.69 to $72.69. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3, level 1 being for beginners, level 2 for intermediate, and level 3 for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.